Europe wants a digital euro, not a question anymore, a decision. The only question left is, what kind of system will it be? And here's the shocking twist, because European officials are now openly discussing whether Ethereum or Solana could become the settlement layer for this new currency. Yes, two of the most popular blockchains in the world, used for NFTs, DeFi and stablecoins, might be repurposed to run the EU's programmable money. But don't be fooled, because this isn't about choice. This isn't even about freedom, this is about control. So let's break this down. The European Central Bank, or ECB, has been working on the digital euro for years. We are now in what they call the preparation phase, and it's entering its final stretch. And the ECB has just released its third progress update, so here's what's been happening. They are drafting a rulebook, which is basically a full set of legal and technical requirements for how this money would work. They've been doing things like running user research, asking citizens and businesses how they would use a digital euro. And they've even built an innovation platform where about 70 market participants, banks, payment providers and fintechs are running tests. Now, this phase runs until October 2025, which is the deadline for when the ECB Governing Council is expected to make a final call. Do we move forward with this or not? But even if they say yes, the project would still need formal EU legislation, and anyone who has been following EU regulation knows that's where the real power games begin, because once Brussels gets its hands on the steering wheel, expect more restrictions, more oversight and less freedom. And here's where things get really interesting, because most people would assume that the ECB would build the digital euro on a closed permission system, which is a private blockchain that nobody outside of banks and governments can touch. But according to the Financial Times, officials are actively discussing whether Ethereum or Solana could play a role in issuance and settlement. And so the question comes, well, why would they even consider this? Well, there's a few reasons. One is adoption. Ethereum and Solana already support huge ecosystems. They are tested. Millions of users know how to interact with them. There is also interoperability, because if Europe builds its CBDC on rails that people already use, it might integrate more easily with wallets, DeFi and payment systems. And the third thing is legitimacy, because using blockchains could make the digital euro appear more open and transparent. But let's be honest, if central banks build on Ethereum or Solana, it won't be the version of Ethereum or Solana that you and I use. It'll be stripped down, locked down fork where every transaction is monitored, traced and tied to your identity. Now, Ethereum was designed for permissionless finance. A digital euro built on Ethereum would flip that idea on its head. So why the sudden urgency? Well, the answer is simple. The dollar is winning the digital money race. The US has been moving forward with stablecoin legislation, giving legal clarity to tokens like USDC and indirectly to Tether. And whether you like them or not, let's think about this in realistic terms. Stablecoins are already dominated by the dollar. Tether is worth over $110 billion today, and USDC remains one of the most trusted stablecoins for institutions. And together, dollar stablecoins account for over 90% of global stablecoin volume. And for crypto users across the world, from Asia to South America, when they want a stable asset, they do not look to the euro, they look to the dollar. And I think that this is terrifying European policymakers, because if this trend continues, the euro's relevance in the global financial system will just keep shrinking. So the digital euro isn't just about technology, it's actually about geopolitics, and it's about Europe clawing back some relevance in a world where money is becoming more digital every day. Now, in Brussels, the buzzword is strategic autonomy. EU leaders are saying that the digital euro will reduce dependency on US payment systems like Visa and MasterCard, that it will strengthen the bloc's independence in times of geopolitical tension, and improve resilience in Europe's retail payment system. But the real question here that we should all be asking is, autonomy for who? Because for the average European citizen, a digital euro could mean something very different. Things like programmable restrictions, where money that can only be spent on things like government approved goods, automatic taxes. Payments could be instantly skimmed for VAT or income tax before they even hit your account, and surveillance by default. Every transaction tied to your digital ID, traceable forever. Now, I don't know about you, but that's not autonomy. That is the most advanced financial control system that Europe has ever built. And here's the irony, because even if Ethereum or Solana are used as the base layer, it doesn't matter because the rules won't be set by code. They will be set by politicians. So where does this leave us? Well, by October 2025, the EU will decide whether to push the digital euro forward. And if they do, and if they really use Ethereum or Solana, it could mark one of the biggest turning points in crypto's history. And on the surface, it might look like adoption because you're going to have a central bank using the same chains that we use every day. But beneath the surface, it could be the opposite. A total inversion of what crypto was built to be, because crypto was designed to give individuals freedom from centralized control. And the digital euro could take that same technology and weaponize it to limit choice, track spending, and enforce compliance. So let me leave you with this thought. If the EU does launch a digital euro on Ethereum or Solana, it will test the very soul of crypto, because the question will no longer be, can blockchains support governments? The question will be, can blockchains still protect us from them? So this next year is critical. Europe is building the future of money, but whether that future is about freedom or about control depends entirely on who writes the rules. So now over to you. Would you use a digital euro if it ran on Ethereum or Solana? Or does that just sound like a shiny new cage with a blockchain logo on it? That's it for today's episode. Thanks for watching, thanks for listening, and I'll see you in the next one.